Have you ever thought about where your money goes when you invest in a company? Does it support industries that pollute the environment? Or is it funding businesses that are making the world a better place? The financial landscape is shifting dramatically, and at the heart of this transformation is ESG, environmental, social, and governance finance. It's no longer just an ethical consideration. It's becoming a financial necessity. In today's world, investors, businesses, and even governments are prioritizing sustainability more than ever. Regulations are tightening, consumer demands are changing, and financial institutions are making decisions based on more than just profits. But what does this all mean for you? Whether you're an investor, a business owner, or just someone who wants to understand how finance is evolving, this video will break it all down. We'll explore the biggest ESG trends shaping 2025, the forces driving these changes, and the predictions that could redefine entire industries. Let's get started. The rise of ESG. A decade ago, ESG investing was considered niche, something that only a small group of environmentally conscious investors focused on. But things have changed. ESG is now mainstream, with trillions of dollars flowing into funds that prioritize sustainability. Governments are passing stricter regulations. Financial institutions are rewarding ESG-compliant businesses, and consumers are demanding greater transparency. Companies that fail to adapt are finding themselves at a serious disadvantage. One of the biggest driving forces behind this shift is regulation. Governments around the world are tightening rules on ESG reporting, making it harder for companies to exaggerate their sustainability efforts. The European Union, for example, has introduced new corporate sustainability reporting requirements that force businesses to disclose their environmental and social impact in detail. The U.S. Securities and Exchange Commission is also moving towards stricter ESG disclosure standards. This means companies can no longer simply claim to be sustainable. They need to prove it with real data. But it's not just governments that are driving change. Consumers, especially younger generations, are reshaping the market. Millennials and Gen Z investors are inheriting wealth and using it to support companies that align with their values. These generations care about climate change, fair wages, and diversity, and they are putting their money where their beliefs are. Companies that fail to meet these expectations are quickly falling out of favor. There's also a strong financial argument for ESG. Companies that prioritize sustainability are proving to be better long-term investments. Research has consistently shown that ESG-compliant businesses tend to be more resilient, more innovative, and ultimately more profitable. A study by MSCI found that firms with high ESG ratings experienced lower risks, stronger financial performance, and greater investor confidence. In short, ESG is no longer just a moral issue, it's a financial strategy. Key ESG trends for 2025. As we look ahead to 2025, several major trends are shaping the future of ESG finance. One of the biggest changes is the push for standardization. One of the biggest challenges in ESG investing has been the inconsistency of ratings. Different agencies score companies using different criteria, making it difficult for investors to compare businesses accurately. In 2025, we're seeing a major effort to fix this problem. New global reporting frameworks are being introduced, making ESG data more reliable and transparent. AI and big data are also being used to analyze ESG metrics in real time, helping investors make more informed decisions. This shift will reduce greenwashing, where companies falsely claim to be sustainable, and ensure that ESG investments have a real impact. Another major development is the growing recognition of climate risk as a financial risk. Climate change is no longer just an environmental issue. It's now a serious concern for investors and financial institutions. In 2023 alone, climate-related disasters cost the global economy over $300 billion. Banks, insurance companies, and asset managers are starting to factor climate risks into their financial models, meaning that carbon-intensive businesses will become bigger liabilities. More companies are being required to stress test their portfolios against climate scenarios, and sustainability-linked financial instruments are becoming more common. This shift means businesses that ignore climate risks will find it harder to secure funding and stay competitive. Social impact is also becoming a bigger priority in ESG investing. While the environmental side of ESG has received most of the attention, the social aspect is gaining momentum. Investors are paying more attention to how companies treat their workers, their commitment to diversity, and their impact on society. Businesses that fail to address social issues, whether it's fair wages, diversity initiatives, or ethical supply chains, are facing increasing pressure from both investors and the public. In 2025, we'll see companies that prioritize these factors gaining a competitive edge, while those that ignore them will struggle to maintain investor confidence. ESG is also expanding beyond publicly traded companies. In the past, ESG investing was mostly focused on large corporations, but now private markets, startups, and venture capital firms are being held to the same standards. Private equity investors are demanding more transparency on ESG initiatives, and startups that integrate ESG principles early on are finding it easier to attract funding. This shift means that ESG isn't just for big corporations anymore, it's for businesses of all sizes. Technology is also playing a crucial role in ESG's evolution. AI and blockchain are being used to improve the accuracy of ESG data, making it easier to track and verify sustainability claims. AI-powered analytics platforms are providing investors with real-time insights into corporate ESG performance, while blockchain is enhancing transparency in supply chains. Smart contracts are also being used to automate ESG-linked financial agreements, ensuring compliance without manual oversight. These technological advancements are making ESG finance more data-driven, reducing the chances of manipulation and greenwashing. Predictions for 2025 and beyond. Looking ahead, ESG finance is only going to become more influential. By the end of 2025, ESG-focused investment funds are expected to surpass half of total assets under management, making them the new standard in the financial world. Investors, banks, and even governments will continue to prioritize ESG-compliant businesses, meaning that companies that ignore sustainability will struggle to raise capital. Another major shift is the rise of carbon pricing. More countries are expected to introduce carbon taxes or cap-and-trade systems, making emissions reductions a financial necessity rather than a voluntary commitment. Companies that fail to lower their carbon footprints will face increased costs, while those that innovate in sustainability will be financially rewarded. Regulations will also continue to tighten. Governments and regulatory bodies will enforce stricter ESG reporting rules, making it even more difficult for companies to greenwash their way to success. Businesses that fail to provide transparent, verifiable ESG data could face legal consequences and investor backlash. Perhaps one of the biggest changes will be the growing exposure of companies that falsely claim to be sustainable. As technology and regulations improve, greenwashing will become harder to hide. Companies that exaggerate their ESG efforts will be called out, and investors will start moving their money elsewhere. Transparency will be key in 2025 and beyond. The ESG revolution is already here, and it's transforming how we invest, do business, and think about finance. If you're an investor, it's time to pay attention to ESG funds and companies that prioritize sustainability. If you're a business owner, adapting to ESG trends isn't just about compliance, it's about staying competitive in a rapidly changing market. And if you're someone who simply cares about where your money goes, your choices matter now more than ever. As we move forward, ESG finance isn't just a passing trend, it's the future of investing. The question is, are you ready for it? What are your thoughts on these changes? Are you already investing in ESG funds, or are you considering it for the first time? Let us know in the comments. If you found this video insightful, don't forget to hit the like button, subscribe for more finance updates, and turn on the notification bell so you never miss out. Thanks for watching, and we'll see you in the next one.